But I think I'd like to start with a short introduction from you to the audience to explain who you are, what great things you're working on, and yeah, to take them with you on your journey within sustainable finance.
Yes, so I'm the CEO of Novethic, which was launched in 2001 with the two jobs. First, to be a web media dedicated to sustainability as an economic and finance dimension, and others to be a research center dedicated to sustainable finance. So we published since then some surveys about the main practices, the kind of things described just before. And I was a member of the high-level expert group on sustainable finance launched by the EU in 2017. Our group designs what is now the action plan on sustainable finance. Really, and that's something crazy when you are thinking about that EU just in 3 years implement and changes the framework of finance to promote sustainable finance as the framework, as the business as usual scenario. So it's, maybe last word, among the high-level expert group, I was the one to try to push the idea that we need to embed citizens in this new, in this movement, is this transition, because we need to explain what is sustainable finance, how they can contribute, how their savings can contribute, but also how works finance, because if not, and things were explaining just before, if not, we could have very, very big problems, because if citizen doesn't understand the purpose of finance, it will be dangerous for many aspects, including democracy.
Thank you. We'll definitely go into more depth into these practical and concrete examples you're posing. But first, take
Thank you. It's a great pleasure to be here. So I'm Krisztina Tora. I'm a Chief Market Development Officer at the Global Steering Group for Impact Investment, in short, the GSG. So the GSG was created in 2013. At the time when the UK had the G7 presidency. And at that time, David Cameron and our chairman, Sir Ronald Cohen, who is also the father of venture capitalism, they launched something called the Social Impact Investment Task Force. So at those 7 countries, so the G7 countries plus Australia, they created what we call national advisory boards. So they put together people from government, investors, financial institutions, experts, and practitioners to look at what impact investment means for them and for their countries. So after a year of very, very intense work, they came out with national strategies and recommendations. So they decided at that moment that actually it was needed. It was very important to carry forward this work and continue implementing and doing more to create favorable and enabling environments and ecosystems in their countries to push more capital towards impact. So now, and that's how the GSG was created. So now we represent those countries, but we still have been growing, and so we now represent 32 countries in the European Union. And still, we're working with many other countries who want to create these advisory boards to push more capital towards impact. So I'm going to stop here, but I have a range of examples to share how the glass is actually half full, or maybe 3/4 full, but we need to accelerate to top up the missing.
Thank you so much. I think everybody's super eager to hear a bit more about these practical examples. So maybe you could explain a bit more about these, the eco-label that can really change a certain framework of sustainable finance, and also the savings, I think, the savings element you were talking about.
Yeah, to address the citizens, or to address the savings of the citizens, we need to have very easy and simple tools. That's why eco-label could be an option, because as far you know, when you are going into a supermarket, you choose your products because they have an eco-label, and so you trust the environmental aspects of the products. So the idea is to make the same thing for financial products with an eco-label which can be useful to guarantee the environmental qualities of financial products. But theoretically, it's quite easy. Concretely, it's more difficult because we have other experiences, because now you could find 8 labels among the European financial markets, which 8 sustainable finance labels. Some of them are green, some of those are more broad about ESG, which is, as it was explained just before, a broader concept, which is which helps to embed a broader universe of companies. For green, we have a very interesting experience in France, because there is a green fin label launched by the Ministry of the Green Minister on the French government, and we are auditor of this label, which has 2 characteristics. First, you need to invest in green companies enlisted by a taxonomy, and as far as you know, there is now a European taxonomy, which is the best tool to explain what is green and what is not green. But also they have to exclude fossil energy companies and nuclear companies, which is, as you remember, it's a French label. So it's very ESG controversies, or company which has controversies. My last point was to explain that this is a kind of very concrete example that could be helpful to say, okay, I'm sure that this product is invested in green economy, but not in brown economy. And so our problem is now the kind of labels we have began to be more and more like that, because it's the demand of the customers, but we have to make some progress. And maybe last figures, we have to keep in mind, we have 8 labels, but less around 1,000 products labeled, which is less than 5% of the European market UCITS funds. So we are far away from a huge movement, but that's the beginning of something, and it will be the growth is led to the idea that customers and savers are asking this kind of products into their banks or insurers.
Yeah, I think everybody in this audience can admit that if you want to make good and sustainable choices, it can be terribly difficult. Do you pick a cucumber with a plastic cover or not? Is it better? Is it not better?
There is a cloud of very technical aspect. ESG. ESG is very clear because you are talking about environmental, social, and governance, but sustainable, responsible, green, social, and all best in class, best in universe, exclusion, or others. So.
Very easy.
So the idea, the next steps will be, and the European Action Plan is very useful for that, because it clarifies things. So I hope that in maybe 2 or 3 years it will be more clear for the customer.
And how do you look at that, Krisztina? Could labeling like this help you in creating the framework of more responsible or impactful economy?
So thanks. I think we're looking at it from an even kind of higher perspective. So we're looking at it, first of all, on a global perspective, on a system change level, and working with a range of countries. So it's really interesting to hear what's happening in France and how customers are getting engaged in here or in the UK, kind of advocating for their pensions or their financial investments to be more sustainably directed. Now, what we're doing is very similar in terms of the idea. So what we want to see is that impact is a deliberate decision driver in every decision for investment, for business, for policymakers, and for consumers. So that we create a society and an economy where impact is a decision driver. Now, how do we do that? And what are the kind of different ways that we can do that? First of all, I would like just to start, because I know in France and in Europe in general, definitions and what words are we using is always the starting point. Now, I want to start with that to say it's not the starting point anymore, because there is a consensus, there has been a consensus for some years now about what impact is, what it means, and how, what is exactly responsible, what is sustainable, and what is impact. So I think we have gotten there. And if you don't know about it, I really recommend that you check out the Impact Management Projects website, because that's where there is this consensus, and it's very easy to understand. Have a look at their frameworks. They have been working with more than thousands and thousands of experts on this topic all around the world to get to this consensus. So we know what impact is and how to measure it. And basically, it's a very simple framework also to remember what responsible, sustainable, and impact is. A, B, C. Responsible is avoid harm, A. Sustainable is benefit to stakeholders, B. And C is impact, so contribute to solutions. And that's very, very easy. Just remember it, and you will get very familiar with responsible, sustainable, and impact. The objective is that we drive capital along the line from responsible to sustainable and more to impact. And as someone was saying on the panel before, yes, of course, it's still only 500 billion. It's not even $1 trillion. But if you look at the picture, it's growing very fast. It's double-digit growth every year. Here in France, impact investment has been growing 11% since last year. It's now 4 billion. And there is incredible kind of energy and dynamism and lots of initiatives that you can build on and do to do more. So I just want to continue with this example of IMP and how we're changing the system. So IMP has a network of organizations, including UNDP, IFC, all of the organizations working on systems, and they are discussing how do we change the system with accounting, with all of the kind of principles. IFC has published their principles. They're going to release lots of case studies at the spring meeting of the World Bank in April. Now they have 82 signatories that follow the principles. So if you're an investor, have a look at the IFC principles. UNDP is developing standards, and they will develop a certification and a training model to be certified as an impact investor, so that we don't go into the, whatever impact washing, rainbow washing that we may be seeing sometimes here. And then what we're contributing as the GSG to this initiative is something called impact-weighted financial accounts. So, and we were talking about universities. We have someone called George Serafine, who's actually he's a business accounting professor at Harvard Business School. So he's like on that side, and he's coming in and he's saying, okay, how can we, one day, the vision is that we could compare the balance sheets of two companies that have the same revenues, but based on their impact. So weight up or weight down, their financials based on the impact that they're creating. So, if you have child labor, then you weight down some of the assets that you have in your balance sheet. And if you're creating or you're regenerating the environment, then suddenly your finances go up. So it's an initiative. It may work. It's hugely ambitious. But there is many people contributing to it to make it work. So that's one aspect of how we will incentivize the system to look at the right things and the investors. The second is there are lots of really big innovations in terms of finance, and how do you create this trickle-down effect of impact investment. So for instance, you might have heard about Big Society Capital, and actually Cliff Pryor, the CEO of Big Society Capital, is talking tomorrow. The idea is that you can use unclaimed bank accounts, and you can put them into a wholesaler, a social investment bank, if you want. So this is what the UK did in 2012. They put 400 million of unused bank accounts, basically bank accounts that have been forgotten. People who died, they have been there sitting, money in the banks for 15 years, not used, not touched. It's public good. So they've taken that money, put it into Big Society Capital, 400 million, and they asked the 4 biggest banks to also contribute. So it's become a 600 million investment only into impact. And that has gotten a very interesting way to develop and incentivize the markets and build the ecosystem. So they've invested into intermediaries, so smaller VCs and PEs, venture capitals and private equities that then invest into social entrepreneurs in the UK. So, and that has happened, that has been now replicated in Japan, in Korea, South Africa is doing something similar, Canada has done it. So it's a way to look at where money is sitting and it's not being used for impact and repurposing it for creating public good. And I have a range of other examples, but...
Find Krisztina later for like a whole range of more interesting examples. Thank you so much. So we're reaching the end of this session on financing the transition. Maybe like a closing remark from the both of you. What would you like this audience to take away from the whole Change Now summit these days?
Maybe to have the idea that you have to think as a savers, also as a citizen. If you want to buy, I don't know, an organic product to eat or an organic product to wear, you have also to think about the use of your savings and to ask to the organization who manage that, what do you do with my money? And I want to have accountability on that. It's a really huge leverage to make the change now very concretely.
Thank you.
It's a difficult call to action, I guess, because there's so many things that could be said. But
you have to pick one.
One thing is whoever you are, wherever you're sitting in the ecosystem, whether you're sitting in government, whether you're an investor, whether you're just a consumer, whether you're a student, an intern, someone looking for a job, whoever you are, there is something really concrete that you can do, or many things very concrete that you can do now and big. And that's my call for action, is start now and think about the biggest changes that you can do. I'm seeing it every day, it's possible, and it's really exciting.
Thank you so much. Thank you, everybody. And thank you, Anne-Catherine.